Wasn't last week the wild ride that moved from the prior Friday's bottoming tail bar, which implied it would go up? And in the prior video, we looked at the 65-minute chart that was in a downtrend with reference points above. Yet on the gap up, it just sliced right through some of the resistance and kept going as money poured into financials and healthcare and defensive issues, and then peaked at resistance like it typically would, and it was supposed to go sideways or form a continuation pattern to propel it higher, but there was some hawkish comments by, I don't know which Fed official may have said it, but dashing hopes for a December rate cut took hold and right back down to where it started and below ensued. So we've got this trading range now going on. And I'll move this up a little bit if I can grab that. I've always got difficulty doing that. We've got this trading range. And whether it stays in there or not, or moves lower, yet to be seen. Breadth is still just neutral. Sentiment is neutral. Absolutely no advantage whatsoever there. What we do see is that interest rates pushed higher on Friday, the 10-year and the 30-year. And I suspect if they push up above these resistance levels, around 4.8 on the 30-year and 4.2 on the 10, I think that's going to put a lot of pressure to the downside on the broader markets. So you want to set alerts on that to be aware if that is actually happening. Volatility did have a move up, and have to put it on a bar chart to see the spike where it pushed up and came back down again. But overall, it's relatively low. So on a closing basis, there isn't a big expectation for a lot of volatility. But a lot of stocks have seen some incredible downside action. We'll see if we can pick off a few of those. Corporate bonds, dividend there, so you'd have to drag this up overall. Kind of directionless, but that flipped up and then back down on Friday. The Qs came down. There was the gap down on Friday, right into that area of support in 600, and buyers stepped in and pushed it up throughout the day. We'll see if this little retest and reversal pattern follows through to the upside. If interest rates are pushing up, I don't think it will. What would be great would be a little consolidation day, kind of a 1, 2, 3. If that was in the cards next week, we'll see. What we don't want to see, or what bulls don't want to see, is a reversal back down, forming a bearish 180. If that was to happen on Monday, I'd be betting this is going to go lower. And what would support that would be these interest rates pushing up above those reference points. So we've got patterns, we've got internal gauges, and we've got intermarket analysis. And interest rates are going to be a significant key to see which way things are going to go. I constantly hear about a weak dollar by commentators on the talking heads, yet it's just bottoming out here. It's pulled back over the last week or so. It's still above minor support. It flipped up a bit on Friday. I don't know. I guess you step back. I don't guess. I mean, if you step back and take a look at it from the decline that occurred, let's fix that up. This decline, you could say, yeah, it's weak, but it's been bottoming. And if it takes out that high, it's going to be going higher. We'll see what they say from there. And if it does go higher, historically, that would imply that gold is going to drop. So a lot of pushes and pulls by different parts of the market, and that's got to be resolved. USO, crude oil, had that move up. It spiked down earlier in the week and then flipped back up again, so that's just in a trading range. And yield curves, not telling us too much. They've improved. The idea of the Fed not cutting, it's kind of supportive by the 13-week, which popped up a little, but it's sideways. Just another piece of information suggesting indecision, and nobody really knows what's going on. ARK funds gives you a better insight into what's going on in the markets. collapsed, violating, pivot lows, exploration, collapse, evolution, breaking down and through pivot lows, and everything reversed on Friday after the gap down. It was just a little bit too much, too fast, and the gap down got bought. Overall, we have to see if there's any follow through or the lack thereof this week. Generation, that broke down even further. And there's innovation, of course. And there's another. So, and we haven't even gotten to Bitcoin yet, which got destroyed. They have a Bitcoin ETF as well. FANG stocks. Well, this is the FANG ETF, MAGS. That got bought on Friday. One down day, two down days, gap down into support. Buyers stepped in. NVIDIA, damaged. Big up, big down, a lot of whippy volatility. Had a nice day on Friday. Again, we'll see what kind of follow through there is. These kind of patterns are really good for put spreads if there's premium. Netflix, that was a put spread down here. It went up, did what was hoped for, and that broke down on Friday. Apple holding up the best, but got rejected at the end of the day. We'll see what that's going to do. Amazon, that's still, that gapped up on the earnings report. And so it really hasn't been totally damaged yet, but ideally it would have held up better than it has. Meta continues to be weak. It really didn't benefit too much by Friday, but it held that pivot low, and this could be something that maybe can move up a little bit this week, just based on the retest of that pivot low. Alphabet has been one of the strongest, if not the strongest, I guess, besides Apple, but that broke down under the pivot low. So there was a lot of weakness. And Tesla, that broke down and closed under all of these pivot lows, so the trend has turned down. And Microsoft has just been, I guess, a bit of a nightmare, with the strength, the collapse. Looked like it was going lower, flips back up again. That looks good for a put spread. And if it can clear these highs, that would be, I guess, a real good implication for tech, I guess, in the short term, and this could move up. We'll see how this all unfolds. Looking at the indices, I'm doing a little switch up from writing about all of these to just reviewing it in a video. And I can look at these and sort these columns doing this, and we can see, as far as stocks go in there, which ones outperform or underperform. So last week, healthcare was the best performer, up almost 4%. Looks great. The weekly chart looks great. It broke out. I mentioned this as a bear sandwich last week, right? The meat in the middle, the bear down bar, and the buy above the highs, and that just exploded higher, and that looks great. A lot of money going into healthcare, which is defensive. Energy looks like it's going to go higher. It's up at this resistance. It's just within this big sloppy trading range. I've got the 65-minute here, but we'll see if we find something on a 65-minute chart. Within these sectors, what's done great or not. So if you have this, you can sort these by these different columns looking for setups. ADX, trend strength, sorting it this way, you can find strong ones. And the green check mark would say it's strong. If it's red, it's weak. But a high ADX tells you that it's a strong trend. And then the relative strength is high. A strong trend being 31 is good. When it gets up around 60 or so, it would imply the end of a trend. So looking at this, Halliburton, a little whippy. It got a breakout failure, but overall the trend is up, and that gets the benefit of the doubt. I would suspect this is going to go higher. You can see the weekly trend is not at a resistance area, the wide range bar, so that looks good. Another one, energy, nice reversal. Should go higher, but that one's at resistance, so that's not as attractive. And this is what we call the factory work, another one that's at resistance. So finding ones that are not at resistance would be ideal. If we sort this by relative strength, that's strong, weak, the weaker ones, but in a strong sector. and a nice bullish reversal, range expansion reversal. So that looks like it could go higher. Yeah, the weekly trend is in a sideways trend, but a reversal like that implies that this could go up. I don't like that it's got this much resistance overhead, but a 65-minute chart clearing this gives you an insight as to where, well, it might have the potential to go to by clearing those highs. All right. I didn't look at healthcare, but this is the same analysis, going in here, finding what's strong, what's weak, because even though that sector is doing phenomenally well, you've got 59 stocks within it, and some of them are doing terribly, like this one, and this one, and this one. But if that's a sell setup right there, and that, I like this. Look at this weekly chart. Breaking these lows would imply it's going to continue to go lower into the void below. RMD looks good. It's got a void. Rather than being at support, it reached support, that pivot low, and now you've got a topping tail bar that took out the prior week's high and closed like that. So that looks good to go lower. If we want to find out what's strong, we flip it the other way, sort it that way, and Cardinal Health. Strong trend. It's extended. It does not give you an entry point. Lilly, strong trend, no entry point. And just going through them like that, you then can go and find what's strong and what's weak. Amgen has been strong. I think that's a new all-time high. Maybe not quite, but it looks like it could go higher. And you could look at these columns here. Looking for 1, 2, 3s. Now we have the combo layout, which it looks at everything, not just a particular sector. All right. Materials, sell setup. Same story. Go in here, find that's what's weak, what's strong. That one's basing. There's a sell setup, but it took out the prior highs. I wouldn't bet on it not going down, but the strength of that retracement and that weekly chart would suggest don't short it. And that one's extended, probably good for a call spread. There's a 1, 2, 3. But after a move down, if it could take that out, let's just set an alert there. And that could be a short-term trade, 65-minute chart. At resistance, it's got room to move up. Don't like that as a 1, 2, 3. Probably good for a put spread. When I say probably good for a put spread, you got to go look at the premiums to see what's there or not. Oh, here's one. Steel. I mentioned this one a few weeks ago. And the story there was steel was going to be needed to build cabinets for all of these AI infrastructures. And so this looks good above the highs. Now, AI seems like the bubble that's been talked about almost endlessly is popping a little bit with some of the high flyers getting beaten up. But this is not the end of AI. It's really the beginning, but there's going to be short-term corrections along the way. All right, consumer staples. Still in a downtrend. It came down to major support and reversed. With defensive in play, this should take out those highs and continue to move up. And again, looking at what's strong, what's weak, sell setup, it's extended to the downside. You got a little breakdown failure. So trying to find things that maybe look more constructive to go higher. Well, there's Walmart, got gapped down and reversed. Nothing to do with that, but to see if it can consolidate at resistance. That looks lower. Again, deep retracement. General concept. Don't short sell setups that retrace 100% of a decline. Even though they might go down, it's better left alone. And look at that weekly chart. Bottoming tail bar. Now, it's not at significant resistance, but you can see what I refer to as a poke bar right down there. It's not marked as a pivot, but it pushes under the lows and then it comes right back again. It just doesn't have 3 bars to the left there, but it's got 3 to the right. So in the new course, I use the term poke bars to explain this and why it's a pivot on a lower time frame. Check out that course. All right, let's continue. Communication services. Now it's making lower highs and lower lows. So there's larger corrections going on under the hood. And what did good last week? What did bad? We got TMUS. This could be the beginnings of a bottom. There's no support on the weekly, but it's got a nice reversal. It could be a sell setup under the low. If the markets go down, put an alert down near this low. So while it was a good performer within the sector, it's in a downtrend and it's at resistance. So it didn't retrace 100%, but it had a decent retracement versus a setup like this, which would be called a bear flag, right? Where it comes down and slowly rises into the declining 20, where this is a deeper retracement. With these, you'd want to have 2 and ideally 3 bars going sideways to create the sell setup versus 1, which is not as potent as having 2 or 3. That's just common sense. All right, strong versus weak. Electronic Arts, too strong. It looks like maybe it's a buyout way it's going flat like that. This one, it's sideways. I prefer things that pull back versus breakouts that are up that much. This one pulling back. Well, you get the idea. All right. Spiders. Wide whip. This was the acceleration that created the minor void. And because it came from a consolidation, it should have kept going sideways here and then higher. You go back and watch the videos. I'm sure that's what I said, because that's the factory work. After a several-week consolidation and an acceleration, it should hold on to the gains. And then it had the deep pullback, back up, back down. If this gets reversed to the downside on Monday, Tuesday, look out below. We'll see if it tightens up or not. Again, strong. Healthcare. Drugs. And set alerts down below. Medical. It's all about healthcare. Healthcare facilities. Drugs. This is where they're pouring money into right now. Drugs. And so on. What are they getting out of? Well, just flip it the other way. Well, here's staffing, which we covered in prior videos being under pressure. Right? The whole recession thing, AI taking jobs, they just continues to go down. Real estate, offices. Just, there's good and there's bad. And there's some really good and there's some really bad. And here you have cruise lines, which did so great, collapsed, did great, and now they look like they're heading all the way back down to the lows. Clorox, there's defensive, but money's not going there yet. All right. Technology. We know this is what has done great, and now you had the advance. And so the gap down that got bought on Friday, does it hold on to the gain? Does it go sideways for a day or two? Does it collapse? That's the unknown. We got to see what's going to happen here, because you've got so many negatives and some positives, and overall this just leads us to a more neutral bias. And even though I'm going to say, well, that's a wide range bar on a reversal, look at the 65-minute chart. If it takes that out, there's resistance right there. You can see it on the daily as well. But overall, it's not something to say, let's just pour in here. First, we'd have to see if it even takes out Friday's high on Monday or even Tuesday. Or does it go all the way back down again? So that's why the more neutral bias and the weekly, well, it's been going up. And we see that there's been red bars ignored. I explained about the transition from red to green, and there was the attempt for the transition. And the end of the week came back down, and overall on the weekly chart, it's just going sideways. And does it break those lows? Does it continue to consolidate sideways? Does it have a correction through time, where corrections through time move prices sideways away from a resistance area, which gives it a greater potential to move up? We need more information. That's really the bottom line. So there's plenty of things that just look god awful, looks lower, terrible, terrible, and that's a semiconductor. That's got tons of room to go down. Communication, another one. Oracle, it held the 200. It's on this pivot, but it's damaged. Earnings next month. We'll see what it does. What's doing well? Let's sort it the other way. Cisco. Look, I say this like you could bet your farm on it or your house, but you can't. Point being, look at the pattern. This thing went sideways. And overall, since June, July, it made attempts to go down. And it gaps up on earnings out of a long consolidation like that. And it's nearer at new all-time highs. You have to believe this is going higher. Buy pullbacks. It's just one of the best looking things out there when other tech is getting creamed. This had a strong move, so there's these great looking pockets of strength, and this cleared the 200 and this resistance. So this is definitely one to be looking at that could go higher and maybe even into next year. And here's Akamai. That has been a dog all year. And look at the explosion on earnings. This is one to definitely keep an eye on. Apple. Well, the institutions love it. It's been chopping around. It got a bit of a rejection on Friday. We'll see which way it goes. It's been consolidating for a few weeks. MU is the strongest of the strong in the semiconductors that got bought on the gap down. You could say it's extended from the 200 and a bit from the 50, but it's not extended from the 20. So it's just a slow, plodding, self-correcting uptrend. Looks great. How do you get on board this? I don't really know, other than just to buy it with a big stop. The momentum slowed on the weekly time frame, so I wouldn't be doing anything. Let's see what the beginning of this week comes to us. What's the weakest? I think we looked at this. Bad, 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 bad. All right. Real estate. Garbage. Stay away from it. Is there anything strong in it? Maybe. Look at that. So, healthcare. There you go. Enough said. Healthcare. Hotel. I don't know what it's hotels and motels, what that is all about. But, when you see other things that are so weak, well, it's a REIT. I guess, I don't know, maybe people not buying houses, they can long-term rentals. I don't know the answer. Financials, that was another wild ride. It just helped drive the Dow higher. Look at that advance and then that collapse. Terrible. I mean, just wild price action. That one held on to its gain, CME. It's at resistance, so we'll see what it does. Maybe it trends under that low. See what it does. Allstate, so insurer doing well. Lowe's, another insurer. But craziness, new all-time highs and a collapse. Look at that weekly bar and that reversal back down. That is not a good sign for the broader markets. Goldman Sachs, breakout and collapse, topping tail. So you got a market of two themes: what's doing well, what's doing not well, what's doing terribly. So even picking the right things comes with unforeseen risks as far as, well, earnings, but look at here's one that gapped down on earnings and reversed right back up again. But other stocks like Goldman and JP Morgan that looked amazing, and then, you get this Fed scare thing and it reverses to the downside with a vengeance. Industrials, just a giant mess going sideways, and the same story. What's doing good? So we can find strong. Does it give us an entry point? So stocks like this, you just got to keep an eye on them and watch them and set alerts. Maybe it comes down here and it sets up, or you have to continue to watch it to see if you get a continuation pattern. FedEx, that's a good sign. There's a lot of, again, two themes: bad, neutral, and terrible, or great. But this is constructive that it could go higher. Looks good. I don't know what's with that. When I see something gap up and go sideways like that, typically it's going to be a buyout. That's an earnings gap going sideways. And that shipping, we looked at some of these last week. This continues to consolidate. Let's set an alert up there. See if it can take out the high. Another shipping. We'll see if it pulls back. UPS bringing up the rear in earnings next year. And another one. So a little sloppy, just not the kind of patterns that we look at to be like, that is ready to go. And while it might, and we're looking for things that are clean, right? Building materials. So that's interesting that this, well, it gapped up on earnings, yet if we look at others within that sector, this is industrials, but if we were to take a look at, say, like Home Depot, not so good. And if interest rates go up, like that Friday's bar suggests it will, this is going to go down. And Lennar might break down. So, utilities, still constructive. It's retesting this wide range bar. The ideal would have been for it to take out the highs. But, the weekly chart is in an uptrend. We'll see what it does. I think even if it takes out this low, buyers are going to come in because it's, in part the AI theme, which is getting a little bit of flack right now. But, the weekly chart looks great. So ideally, this would come back up above Friday's high, and that would support a move to the upside. Same thing. Look at what's strong and what may not be. Looking for patterns. So a lot of them are stalled up near their respective resistance areas. All right. Consumer discretionary at the bottom of the list, most likely because of Tesla for the most part. But, well, look at this. Casinos and resorts doing well. People can gamble. Expedia. People still buying cars if they need them. Apparel stores. And, lodging. Ford looks pretty good. It had a little breakout in failure last week. Toys. I think, what was that? Hasbro. That's a toy company. Ross Stores, that broke out and failed. Still in an uptrend. Self-correcting uptrend. That one's a mess. McDonald's all over the place. And there's another lodging. It's a mess. And O'Reilly. Strong move up. Got a decent weekly chart. Just nothing to do. Nothing to do. Just messy. And Starbucks. Bottoming out here, maybe. You can see it's retesting lows and got rejected on Friday. So, just nothing to do there. Amazon, we looked at pulling back. Lulu, just a mess. Stay away. Pizza, this is not doing well. And I remember this was touted somewhere in here at the beginning of the year, I believe, as Warren Buffett buying it. Berkshire Hathaway hasn't done anything. Actually, it doesn't look good at all. And there's another resort. That one's not doing good. So the same theme. Sneakers not doing well. As to split markets, where we looked at. There's the Tesla breakdown. $1 trillion pay package. If he does what they want him to do, he deserves it. But clearly, institutions getting out of it for the short term, and we'll see how this pulls back on the weekly chart. Look, eventually, wherever these high flyers go, institutions are going to come back for it. This one looks definitely lower. Look at the gap down, the inability to go up, and now breaking down. Definitely a call spread. 2.5 earnings. Below the low, you just need a decent stop. And yeah, I'll set an alert up above here to see if it pops up and forms a topping tail bar or whether it breaks below the low. And so ideally, when you have something that breaks down and the idea of getting 2 or 3 days of consolidation builds a base on the 65-minute time frame to push prices lower without having the concern of it whipping all the way back up. So the only thing you can do is give it a big stop and share size it smaller and look to add at the appropriate time. So we'll see what this week brings. Watch the interest rates, and you can see all of the red dots that have evolved over the last several weeks, where it was primarily all green. You can see what's still up on the year. The only thing down is consumer staples, but it's improving. I made this column here to see from the top on October 29th. That was the top of the S&P. As you can see here, what's gotten beat up the most. So healthcare, again, at the top of the list. Energy, staples doing better, whereas technology is getting pounded to the downside and so on. These two are still above the 20. Everything else is below. So looking at this, you can quickly see that the health of the market right now is not good. Are they above or below the 50? What's above or below? Again, healthcare at the top, it's the strongest. Earlier in the year, it was down here at the bottom. Communications are now a decent amount below the 50 MA. But what we look for is when they get to be like 7, 8, 10% above or below the 50 MA. They're typically near a turning point. And so right now, healthcare, yeah, it's short-term extended away from the 50, but it's buyable on pullbacks. Ideally, it goes sideways, forms a correction bar, and continues to go higher from there. As always, questions, email me. And Dan, again, and Greg at Master Trader.